Yes, it's true. Seniors are set to benefit big time from this new plan. In fact, the majority of older Americans are going to come out ahead in a major way. Why? Because the push to eliminate taxes on Social Security has officially been scrapped. But don't worry. It's being replaced with something even better. And in just a second, I'll pop up the article on screen so you can see exactly what's being proposed instead of the no-tax plan. Now you probably remember that original idea of no more taxes on Social Security has been floating around for about 1.5 years. And sure, that sounded pretty great. But here's the thing. That plan would have only helped around 30 million seniors, give or take. The new plan being rolled out now, it's actually more valuable and will help more than 70 million seniors. More than double the original number. That's a huge deal. So stick with me as we go over the details. Even though they switched directions after over 1 year of promising no more Social Security taxes, and yeah, I get it. It kind of feels like a bait and switch. This change might actually work out better for more people. Now, just to be upfront, not every single senior will be affected by this, but most of them, they'll see a positive impact, much broader than the original no-tax plan that would have only helped 30 million people. This new approach lets seniors take larger deductions, even bigger than what they would have saved from having their benefits taxed monthly. You with me so far? Great. I'm about to show you that article on screen so you can see exactly what's happening. Also, just a heads up, there's a lot of noise out there, and honestly, some people are talking about this who don't really understand it. So hang with me till the end, because I'll break it all down clearly and fairly. Now, quick heads up for high-income seniors. Yes, this might not help you as much, but don't worry. Most of you will still qualify, and I'll explain it all shortly. All right, let's bring this up right now. Just a screenshot, not the full article. Normally, I'd scroll through the entire thing with you, but in this case, I grabbed the key section that really tells the story. Of course, feel free to look it up yourself if you want. I'm just showing you the part that really captures what matters most. Again, if you've been following my videos, I've covered this in detail before. And as always, please feel free to do your own research. So the big news. The plan to eliminate Social Security taxes is out. Now, why is this a big deal, or not such a big deal? Well, only about half of Social Security recipients actually pay taxes on their benefits. Not payroll taxes, but taxes on the benefits themselves. That usually applies to people with combined incomes over $25,000 for individuals or $32,000 for married couples. Over those thresholds, a portion of your benefit becomes taxable. Here's where things get tricky. Under current rules, Congress can't touch Social Security within a reconciliation bill. A law passed way back in 1974, yes, 51 years ago, opened the door for lawmakers to use what's called the reconciliation process. That allows them to bypass the usual 60-vote requirement in the Senate and pass major bills with a simple majority, just like in the House. That's the process they're using now for this multi-trillion-dollar bill. But under that rule, Social Security reforms are off the table. They can't be changed within the reconciliation bill, plain and simple. So that was roadblock number 1. They couldn't go through with eliminating Social Security taxes the way they originally planned. So, what's the new move? Well, it might actually be a blessing in disguise. Instead of cutting Social Security taxes, they're expanding the bonus standard deduction for seniors age 65 and older, raising it to $4,000 from the current roughly $1,600. Is this a permanent change? No, it's only valid through 2028. But here's the exciting part. While only 30 million seniors would have benefited from ending Social Security taxes, now every senior 65 and older can use this extra $4,000 deduction. That's on top of the regular standard deduction, which is about $15,000 for individuals and around $30,000 for married couples. And yes, this new $4,000 deduction is per person. That's a big boost in your total deduction amount. Let me give you a quick example. Let's say a senior earns $30,000 a year. Under the current rules, they can take the standard deduction. We'll just round it to $15,000. Since they're 65 or older, they now get the extra $4,000 bonus deduction. That brings their total deductions to $19,000. So now their taxable income is only $11,000. That's not even factoring in other possible deductions or tax credits like the EITC. This could really lower or even eliminate their tax liability. Now remember, this is a deduction, not a credit. That means it reduces your taxable income, not your tax bill directly. So if your income is already zeroed out, you don't get money back. But it can definitely eliminate what you might owe. The main takeaway here is this. Combining the standard and bonus deductions gives millions of seniors major tax relief. Again, only about half of Social Security beneficiaries actually pay taxes on their benefits, around 30 million people. But now, with this bonus deduction, all seniors 65 and older, more than 70 million people, can take advantage of it. Quick note, this isn't tax advice, legal advice, or financial advice. I'm not your CPA or accountant. Just sharing general info. Always talk to a qualified professional about your specific situation. So what does this mean? Well, it's great news if you had a tax liability on your benefits. You could now reduce that significantly or even eliminate it entirely. Now I know some folks will say, hey, this doesn't help me. I don't file a tax return, so this $4,000 bonus does nothing for me. And you're absolutely right. If you don't file a tax return, this doesn't apply to you. But here's the catch. If they had removed taxes on Social Security, that wouldn't help you either. Because if you don't file taxes, then you're not paying taxes on Social Security in the first place. So it's basically the same result either way. That's the point I want to make. Some people feel left out, and I totally understand that. But when we compare these two options side by side, this new deduction is actually more helpful for a greater number of seniors overall. Of course, higher income seniors may not qualify. The income limits are $75,000 for individuals and $150,000 for couples. If your income is above that, the deduction starts to phase out. So if you're a single senior earning $110,000, unfortunately this likely won't apply. In that case, the original no taxes on Social Security plan would have been more helpful. Same goes for a couple earning $220,000. First off, congrats, that's an amazing retirement income. But this deduction wouldn't apply. Still, if you're earning over $100K or $200K as a senior, you're doing pretty well. So while this change may not benefit you, you're already in a good financial place. At the end of the day, this is the new plan. And while it may feel like they backtracked on the no tax promise, they were legally restricted by reconciliation rules. They had to pivot, and this was the best alternative they could implement. So I hope this breakdown helps clarify everything. And by the way, if you ever need help with Medicare, enrolling in a new plan, switching coverage, or learning about Medigap, Part D, Medicare Advantage, or you're approaching age 65, don't hesitate to ask. Watch till the end. Give this video a thumbs up if it helped, and I'll see you in the next one. Take care.